Okay, everybody, welcome to another episode of BlockStars, the interview series that is designed to educate and inspire through storytelling of founders. This week, I'm really excited to introduce our guest, Jason Kirby. He's the managing director and co-founder of Thunder VC. It's an investment bank that actually has a matching engine which connects investors with venture capital firms. So he's at the intersection of essentially a lot of investments out there, a lot of different people, and he's somebody that everybody should really know. Plus, he has some additional side projects that you might want to know about as well, which he'll tell you about, including his weekly pitch roast. So welcome, Jason. How you doing today?
Hey, thanks for having me on the show, Seth. I really appreciate it.
Yeah, it's awesome to have you. So let's just get started. Tell us a little bit about you. Where are you from? Where are you based right now? All that.
Yeah, no. Originally from Texas, grew up in Southern California, and I live in New York. I'm definitely an East Coaster now, having sampled all the different parts of the country. Serial entrepreneur for most of my life. Built and sold my first couple of small companies, early in my career, then just wanted to move on to bigger, better things, got into the venture back game, raised about 40 million across 3 different companies, sold 2 of those companies. The third one's still operating today, from, cloud tech to HR tech to ed tech, kind of all across the scope there. Had a lot of fun doing it, because raising capital was always a disaster every single time I went out, because I was in completely different industries, couldn't raise from the same people, had to go to completely new strategies, new investors, new relationships. So picked up a lot of tips along the way, and partnered with my friends over at Interplay Ventures to launch what we call now Thunder.VC. So we consider ourselves, like you said, a tech-enabled investment bank where we provide a free tool and resources to founders to help them identify which VCs they should focus on. And then we have our investment banking services, where we basically help companies get packaged and ready to go to market from typically like a C plus Series A type companies that are usually around $1 million plus in revenue. But yeah, my passion now is helping founders navigate the wonderful world of fundraising, to which it's been an absolute disaster in the last year, about a year and a half or so now.
Yeah.
But not far out from where, I raised all my previous rounds. I didn't raise any money during the peak. So it's nice to kind of see, how we're going back to probably like 2016, 2017 times, where I spent majority of my time raising capital. But yeah, that's a little bit about me, and, happy to be working with founders and supporting their fundraise.
Yeah, I love that. Okay, how did you go from being an entrepreneur to suddenly working in the VC space? That's a leap. I know it's always entrepreneurial, but there's a lot of different skill sets involved in both. How'd you teach yourself?
There was a lot of teaching myself, a lot of just network building, and, just knowing that I can't do it on my own. And being an operator, I've always kind of had to come into situations. I was never really the original idea guy. That was never like my core competency as either a founder or operator in a company. But what I was really good at was identifying something that had a lot of potential, and then putting a ton of resources, my own resources and other resources, into it to kind of get it to a point where it's either fundable, scalable, or sellable. And I've just been able to repeat that multiple times now. And that's been a good enough story for a lot of people that I've raised capital from, and or have helped place capital into other opportunities. And so that's kind of what led me down this path. And also, I didn't want to run a business that was venture backable again. I wanted to kind of own a bigger piece of a business that I knew could, kind of be more my own and have more of my flow and structure. But I don't want to ever say I won't do that forever, just because I tend to always find myself back into like getting into the weeds with things. But I get to do it now with multiple companies as opposed to, just one. So
yeah, that sounds amazing. I mean, what was your first step? How did you first get even started? Like, hey, I'm going to go from entrepreneur to getting involved with this. What was your timeline on something like that? Did you say, hey, I'm going to take a couple months and learn a little bit about it? Or did you said, I'm just going to throw myself directly in, hopefully get, my feet planted into a VC firm? Or what'd you do?
Well, it was after the last company I was at. We had raised a Series A. Company was based in Kansas City. I was in New York. It was just not a perfect fit. Moving forward, I kind of got them off the ground, got them in a great place. But I was kind of reflecting after that experience, because it wasn't my favorite experience as an operating role. And I just kind of reflected back on that. And I just basically started expanding my network and tapping back into my existing network. So I spent a summer just rekindling some relationships, specifically VCs that I have worked with or have known in the past, kind of just shooting the shit, having a conversation, seeing what's out there, what's going on. Particularly thinking about going back to another startup, but I kind of wanted just to play the field, see what was out there. And that's when I had a conversation with the guys over at Interplay Ventures.
Mhm.
And they just kind of like called it right out. And they're like, we think you'd be perfect for like, a tech-enabled investment bank. I'm like, what? Like like, I don't even know what an investment bank is. Like even though I hired a banker for the sale of our, company to Walmart, but they were more of a babysitter and, box checker, not really like moving and making the deal. Like we brought Walmart to the table for that acquisition. So I had really limited to no experience in investment banking. The typical path is you start in investment banking, then you go to start a company. You don't
Mhm.
start a company and then go to investment banking. That's kind of like the unusual path. But I am one for, charting uncharted paths, and felt this pretty interesting, and kind of piqued my interest. And I was like, oh, investment banks are known for being extremely profitable, making a ton of money. Let me look into this. Let me see what this actually involves. And I made it very clear when I was doing my research before I kind of agreed to do anything and like fully jump in. I probably spent about 3 months just kind of getting familiar with it, researching. Also, my wife was pregnant. So that was another thing of just like taking things slow, prioritizing family, and taking care of her and everything. And also starting my business gave me a lot of flexibility on timing and all that kind of stuff. Because when I go into a company, I'm like all in, and I can be very distracted with that. So I wanted to make sure I had the time and flexibility to be there for my family. And so as I'm doing all this research, I just made it very clear to myself, it's like, all right, I don't want to be the banker that I hired for the Walmart acquisition. I want to be, someone that actually adds substantial value to a founder, be able to have a unique value offering to them that's unique to what I'm capable of or what I can share or provide insights to, that's a fit for them. Because we obviously can't work with every single, company. There's only limited capacity. And that's also why we built the tool. The tool is like our kind of like our lead gen tool, like our free resource to founders to tap into. But now we get all this amazing data on all these amazing companies, and we kind of look through and run our algorithm against thousands of companies. And we're like, oh, like these 10 would be really interesting to have a conversation with. And,
Mhm.
we effectively act like a VC in the sense that we're very selective with who we meet with and who meets our criteria. And then we, sit down with them and have a conversation. And so I spent a lot of time interviewing founders, LPs, VCs over like a 4-month, 5-month period. Probably met with probably 200 people in that timeline, and just asking what their problems are, or what, what's missing in the market. And this is when it was like peak of peak. Like this is like the hottest, like, stupid valuations, like 100x ARR valuation multiples, like all these like crazy things. So, I was kind of making some decisions on some bad data at the time, but, it kind of just got me excited. Like I really, these are my people. These are people I like talking with. I like engaging with. I like going and bantering back and forth on macro, micro, market, discussions. I was like, yeah, I see myself spending a long time in this space. Let me go ahead and try to figure out a service and product that will build a sustainable business. And that's kind of how I chose to go down that path. And then I had to get registered as a registered rep under FINRA in order to kind of be investment banker and get a
Mhm.
success fee and all that kind of stuff. So I had to study, and I was like, that wasn't much fun. But I'm no stranger to certifications and exams. They always seem like a big burden or hurdle, but like I just happen to be a good test taker, so it's always pretty easy for me. And kind of flew through those. Took all the exams I needed in less than 2 months. So I was pretty happy about that. And then got it off the ground pretty much May of 2022 is when we kind of officially came to market.
And so you've gone through this journey, and now you actually help all these organizations to prepare themselves for going to a VC and actually pitching their product. So I joined your weekly pitch roast a couple weeks ago. It was great. What I love about it is you were just incredibly candid. There was no beating around the bush. There was no tiptoeing around tulips. You gave pretty candid feedback. Like you rate everybody out of a 1 to 10, you're a 2 or you're a 3. I think it's probably pretty hard to get a high grade with you, but how do you go into that? And you do it on the fly too, which I think is very interesting.
Yeah, so I am moving it to monthly because it was very overwhelming to do it every single
I can
week,
imagine.
deliver that value every single week. And also I got to focus on my clients, but it's a huge hit. We get a lot of attention and attraction from it. But, the premise behind it is, one, there's a rubric of 0 to 5. 0 is like, you didn't even try, you gave me a black and white, deck with no, purpose or anything. And a 5 being like, you're ready for capital now. If you don't have capital being thrown at you right now, it will be coming soon.
Mm-hmm.
I've maybe had 2 5s in, 9 episodes, I think.
I think I get that. Based on the episode that I joined, it makes sense.
Yeah. And I'm very critical just because this is what I wish I had, especially my first company. My first company, we raised only like 300,000 in angel capital. We got to like 40K monthly revenue, and no one cared about us. Like couldn't raise money for the life of me. and we couldn't figure out why. We never really got the feedback that we really wanted, and begged and pleaded for it. And we had a beautiful deck. We had like everything from my side as a founder. I was like, we're awesome. Why isn't anyone giving us capital? And it wasn't until we were really winding down, we got an acquisition offer from like a big conglomerate to kind of buy out the tech, and we started just kind of phasing out, from the business, that someone kind of just came to us and it's like, here's your problem. And I was just like, why didn't anyone say this? And it's basically a market, issue. Like we were going in the wrong market and no one saw venture scale in that market. I didn't even know what venture scale was. I just thought, we have a good business. Why don't you give me money? And that was such a pain point for me as a founder. And then it was just like super clear for every other company I went to thereafter. I was like, I know what venture scale means now. I'm only doing companies that do venture scale.
What is venture scale?
Yeah, great question. So the simplest way to put it is, do you have the unicorn potential? Like, does your business, your business model, your team, the product, and the market you're going into have the potential to produce $1 billion outcome? Like, that's the simplest way I can put it. And is it clean and understandable? And what I mean by that is, are you a founder that's having to go constantly go, and then we do this, and then we're going to do this, and then we're going to do this, and then we're going to do this. And it's like, okay, well, if you can't even get the first thing right, and you tell me about all these other things, like I'm over it.
Mm-hmm.
You're not venture scale, or you're not far enough along to convince me of anything. But you're like a very clear, articulate idea, and it's easy to relate to, and it's clear to see, where this could go down the road, or that there's a lot of money being thrown at this space. It's venture backable. Or if it's you're breaking new boundaries into new markets with new technology that, maybe consider more deep tech kind of solutions that could be huge if there's adoption, but it's a bit risky. Like those are the types of things that typically venture capital, gravitates towards. And in all honesty, my first business was just a good business. It was not a venture backable business. And that was something I wish someone would have told me much earlier, and we would have reprioritized our growth plan strategies. And we probably could have ran a more profitable, scalable business that we could have sold for 10, 20 million. And I would have been very happy. But we focused on venture scale, and we burned through all the angel money we got. And we had to take a, low ball acquisition offer that unfortunately in the last final hour fell apart. And so that's what kind of where the weekly deck roast comes into play, because with Thunder, we have about 2,500 companies that have signed up in the last year on the platform, and 60% of them are published, meaning they meet a loose criteria of venture capital. The other 40% don't even come close to a venture backable business.
Mm-hmm.
And no one likes hearing that. It's harsh feedback, but I feel like there's someone's going to be out there to do it. Now, I could always be proven wrong. And that's what a lot of founders feel like motivated to do. Like, oh, I'm going to show them, like, we're the ones that are going to do it. But it's also just good to, listen to some advice, understand the terminology, understand the markets, and understand that you may still have a very good business, but choosing your capital strategy can be very important to the fate of your business and how you manage your cash. And so that's kind of where what is now the monthly deck roast kind of stemmed from, was just being able to give raw, unfiltered feedback, especially from I come in fresh. I don't even look at the decks before the show goes live. And the reason being is I'm basically thinking out loud what a VC thinks in 30 to 60 seconds when they look at your deck. And I spend like 5-10 minutes because I have to think out loud. So it's, I got to explain why these thoughts are my thoughts. But that's basically what every VC does in the first 30, 60 seconds of seeing your deck. If they got a cold email from you, or like a warm intro or whatever, they look at your deck, that's how they're going to usually interpret it when they don't have context. So that's just something that I like to share with people, so they have an idea like how they should be thinking about that first impression with a VC.
It's worth its weight in gold. You've been through this before. You've done this, right? Like you've had that happen to you. So to be able to go out there and actually help other people is really great. And you're actually giving them really good advice. Like having sat on that one, you really do. It's streams of consciousness. And I love it because I can actually I can't understand how your brain works in all of these situations because I don't work at a VC firm. I don't, work as an investment banker. So I don't know all the little intricacies, but it definitely got me thinking about a lot of things. So anybody that can and would be eligible to take advantage of this, or at least watch it, should absolutely join in. How do people actually participate in it?
Yeah, it's just a Luma/Jason Kirby. So lu.ma/Jason Kirby. And then we have the schedule of events. So the next one, I think September 15th or something like that. Anyone can join, anyone can watch. But if you're brave enough to submit your deck, there's a little caveat there. It says you're opting in for this. You're opting in for raw, live, public feedback. And a lot of people are not comfortable sharing their deck, especially later stage companies, which I totally get. And we have a private booking option where you can book me privately, and I can go basically give you the same feedback, but not blast it on the internet. So that's an option a lot of people would rather pursue. But the nuggets of information and how I speak about the decks that we do get on the show is I try to make it applicable to any founder. I try to make it so that any founder can look at this and replace that deck with their deck from the feedback and be like, oh, do I have that problem? Or is that how people really think about this type of thing? Like, ooh,
What are some general characteristics that you notice? Things that just in general, somebody submitting a deck to you, like these are the checklist of things that should definitely be done. Like this should be very easily digestible, maybe the length or the sort of imagery or the wording, the verbiage, et cetera, like how things should be structured.
So there's the safe play that's title, problem, solution, market, product, business model, go to market, traction, projections, team, whatever. But the problem with that is, albeit that's what everyone tells you to do, and I don't mind it when I see it, as long as I understand it and it's clear and it's articulate and I believe in the opportunity, or, at least agree that there could be an opportunity. I do really like it when people shake it up, because you have to think about the VC. They get 1,000 decks a year, if not more. They need to just see something break up the pattern, because VCs are all about pattern recognition. And it's usually pattern recognition to say no, not yes, just due to the volume. So they're looking for every reason to say no to you as fast as possible, because that means they can put more time to the things they say yes to. And as a founder, you just need to make sure that it's so clear as to what you're doing. And then that's a big enough opportunity in the first, 2 to 3 slides. And also just relevancy too. Just make it relevant to whoever you're sending it to. Spamming the 5,000 different VC firms out there, with your deck doesn't really do you any good, because one, they don't have any context to who you are. They're probably not going to open it. And two, if a health tech, biotech fund sees your B2B SaaS, deck, it's useless. And so it's best to be very hyper targeted. And that's, what we do at Thunder is like, hey, rather than hitting these 5,000 VCs, we've narrowed it down to these 60. These are the 60 that matter. These are the ones you want to actively see, who you have a relationship with, how you can get a warm introduction, maybe through a port co-founder or, someone in your network, and, kind of get that warm introduction and or have more relevancy to when you reach out to them cold, to increase the odds of them opening that deck. That's like step one. And when they actually open that deck, it's a matter of, impressing me, because your deck is a representation of how you're going to run your business. If you have a black and white deck that is, has no professional attributes to it, then they're gonna be like, look, all right, you don't know how to do branding, you don't know how to do marketing, you don't know how to do, sales, like this is where you're weak. Now, if it's a pre-seed company, it's technical founders, maybe I let it go. But if it's like a Series A company and it doesn't have their shit together on the branding and presentation, so it's very stage appropriate as to what you come to the table with. There's a lot of pre-seed angel decks that I see that are like black and white, like here's just title slot, very simple stuff, just because they're just more or less validating an idea. But as you grow in stage and you're either generating revenue or raising more money, you need to act the part and put your best foot forward. Hire a designer, hire consultant. Every deck I put together at the seed plus stage. So pre-seed, always did myself, but at the seed and on, I always bring on a designer or professional consultant, just because you need to get out of your own head. Every founder that puts together their own deck in almost every case has 30 slides, because they got to know everything. You got to know everything about everything I've done, and there's so much potential. But in reality, it's just like, give me the gist, and then I'll decide if I want to have a meeting with you to learn more, because that's ultimately what your deck is for. So I don't like telling people you must have this format or this structure or whatever, the Sequoia format or this or the YC format. Like, do what best articulates your story as a company to show that you're doing something that's impressive and you have the right people behind it and you're in the right market with the right product. And that's not as cookie cutter of an answer as maybe some people want, but you got to think about what makes you unique and how you break the mold, how you break the pattern recognition of a VC.
Yep. I should ask, the decks that you saw that got a 5, what did they do that was just so different that blew your mind?
So one, professional presentation. It wasn't like blow my mind, no animations or anything like that. Like, don't do animations, never do animations, just make it a simple PDF. It should always be deliverable as a PDF. It's defendable as a standalone document, does not need any kind of additional context or presentation value. It's clear to the point, and it's in a going after a massive market, so just like, okay. And I can just as a normal layman, I can clearly connect the dots that, okay, if you did X, to solve Y, that equals a lot of money. I'm like, okay, that's not complicated. And then I was like, okay, now do I believe you? How do you do that? And then like usually the team is like pretty stacked, so it's like a founder of multiple exits, or like super concentrated industry experience, things of that sort. It just helps. That's like the pattern recognition to say yes to, and increases the odds of VCs responding back to you and wanting to have a meeting and learn more. Now, what happens after that meeting, that's a whole other conversation, but that's ultimately what gets the meeting.
Got it. I'm going to shift off making you tell us everything about pitch decks. I'm sure that's not what you intended to do today. So I want to ask, maybe what's one of the more exciting or transformative parts of your work? You work with very interesting people across a variety of different industries, I'm sure. So, how would you describe that?
I think the most interesting thing part about what I do is just when I get to meet a founder that's very capable, doing something that's very interesting, but struggles at some big part of the business. Something that, usually where I come in, is like, messaging, marketing, sales, fundraising, like those, operations, like those types of things is where I kind of help fill in gaps. But being able to clearly articulate to them what that gap is. So basically giving myself that advice, whatever, 10 years ago, that first company, being able to be that person, but then not able to solve it and being able to fill that gap, not just pointing out the gap, but then being able to come in and fill that gap. I get a lot of joy out of doing that. And, kind of just also it's like, the founder's head, like I'm sure my clients would maybe, feel differently, but like, my client's head, I'm sure they're like, they already have it all figured out. It's already like so clear in their head. But like, to me, it's like when they're pitching me, like they're clearly having trouble, fundraising, and haven't gone to market yet. And they're still working on their materials or whatever. When it starts to click for me, that's when it's like really exciting. When I start to like, my wheels start turning in my head and I'm like, oh, like, well, okay, you can do this. Like I might be connecting the dots for the very first time on their idea. And it's like, okay, now I see the full picture. Now this is going to be huge. Now this is a massive opportunity. I just liked you and kind of the market you're in, but now I really see it. And that's probably one of my favorite points. And that's usually when I want to like really pursue an agreement or, an engagement with them. Sometimes it happens a little bit post engagement, sometimes a little bit before, but that's like the most exciting part. And like, sometimes my clients are like, oh, wow, like, all right, yeah. And we use the wording around. I take their, 4 hours of meetings I've had with them and consolidate down to like a 30-second kind of overarching big pitch message. And when I'm able to do that for clients or just any founder, I sometimes it works on like a 30-minute meeting. I can just kind of put it together and provide that feedback. That's one of my favorite parts is when the dots are connected. And the second part is when we start making intros for them to VCs, family offices, private equity funds, whatever it is, and we get a high response rate.
Mm-hmm.
Like when we like, oh yeah, these guys sound great. Let's take a meeting. And like that's always very satisfying because what I like to think I know what I'm doing. I like to think I'm good at it, but sometimes you put yourself out there and you're like crickets. And so when you actually put all the work in it and you actually see the results come out of it and you start seeing meetings happen, you start seeing funding come in and the wheels start turning and all that kind of stuff. That's the other part, like when you see it all kind of come together.
How would you describe the last year and a half then?
Well, launching was a disaster, full transparency. It was the peak of the market had fallen apart and capital markets were drying up. LPs were pulling out capital calls from their funds that they were committed to. GPs were trying to, manage the damage and do damage control. And I had a couple early clients that we were just testing things with. And like, we just didn't get any responses because just VCs were like, I don't care about any new deals. My portfolio is collapsing. We're taking 10, 30, 40, 50, 60% markdowns. Like we need to prioritize this. And there's a lot of internal rounds over the last year. So like net new capital was way down in the last year and a half. And that's not a great market for someone that focuses on raising net new capital. But it was good in the sense that like we got to focus on products. We got to, optimize and improve our product, kind of get our content brand and that kind of stuff. And what it's also done is it's kind of reverted us back to realistic times, kind of like into 2019. Especially going in 2020 and 2021, it was just such lofty, ridiculous times. And like everyone was throwing money at anything. Everyone had a new venture fund. And now that like, the tide is pulled out and you kind of see who's exposed and who wasn't, the strongest ones are standing. And then there's the need for a lot of navigation through a non-frothy market. And so we've kind of found ourselves being approached by a lot of companies and a lot of funds to collaborate just because, they need some guidance in this, the space. They kind of need those instructions because just sending cold emails used to work and now they don't. And, they're various different strategies that worked, a year and a half ago, 2 years ago, don't work. And it's just, I think what the number was, for every $3.50 in demand for capital, only one is being allocated. So, just put that in perspective, it's like only 1/4 of the companies will probably get, capital that are qualified. So that's the other thing. It's like, it's not just everyone wants money, but can be deemed venture backable. Only 1/4 of them are actually getting funded.
Wow, that's crazy. Do you think that's going to change in the near future here?
I think that was the reality we had years ago. And that's where I think we'll go from $3.50, $4 in demand to like $2. And that ratio will kind of work itself out because, and I spend a lot of time telling founders, like, venture is not the way. Debt or, some small private money or private equity is the alternative. There's just been such a buildup of, ooh, venture capital is so sexy. It's validating. It's like, I'm going to be big, I'm going to be huge, I'm going to be a unicorn, I'm going to get all this attention. And I was like, well, is that what's best for your business? And is that best for your market? Is that best for your clients? And so I spent a lot of time just consulting clients. Well, not even clients, just people that come to us or people I have calls with, where now once I kind of get the gist of their business, they want to go venture capital, like, oh, we want to raise this much money. And I'm like, my opinion, take it or leave it, but I think you could build a very healthy business if you raise like $500,000 in debt or like revenue-based financing, or you just get like another $250,000 to get you over a hump, get to profitability, and you own and retain a lot more ownership, and you build just a great business that will provide you an incredible life. Like, or you can fail at raising venture capital. Like, that's my opinion. And so I try to help founders navigate that capital strategy and just cap table management. I've done some acrobatics when it comes to cap table management in my past. So there's just a lot of interesting ways that founders can manage their situation to lead to what could be considered a successful outcome by any standards, but maybe the founder just didn't look at defining success that way. So I try to open up their minds and let them kind of see what options play out. Unfortunately, that means I don't get them as a client in most cases if they're not going to raise money, but I'd rather have them at least be exposed to opportunities that make sense for them, as opposed to, try to make everyone my client, because that's not realistic and I couldn't handle that anyways.
Right. So in that sense, knowing everything that we just talked about, like, how do you stay motivated to continue to grow in the field? Obviously, I think innately or intuitively you like to help people, but for you personally, where do you get that motivation to keep going?
The autonomy, just being able to pick who I work with. We have such a massive amount of deal flow, and like some people I want to work with don't want to work with me, and that's like, all right, fine, fair enough. But then there's ones that I think like, oh, I think I can add a lot of value here. And they also recognize that. And that's, a key motivating factor. And also, we didn't mention this, but as far as how bankers work, like, we take a success fee. And as of right now, we focus primarily on just that, enough our retainer that goes again, as a draw against a future success fee. But we're much lower than, what a traditional kind of gray-haired banker might be in this space, because we have tech, we have tools and resources, and have experience. We move a lot faster than, say, a traditional banker would be. So I find that to, like those be big paydays, and that's incentive, but also just being, like I said, seeing that outcome of like when the idea clicks for me to when we get them as a client, of being able to fill those gaps, to then being able to get them to get funding is something that I particularly really enjoy, and I want to get better and better at. And, be able to kind of build a brand that when maybe we helped you with your seed or helped you with your A, well, then hopefully you come back to us in 18 months, 2 years, when you come out for the B and the next round and the next round. And if we scale this up, we'd love to have our own fund that can deploy capital into some of our clients directly. And then additionally to that, hopefully taking these companies public one day, going like, fighting for deals between JP Morgan, Goldman Sachs. Like, that would be a fun scenario. It's a bit of the pipe dream, for now at the stage we're at, but that's, if everything goes really well and we do what we say we're going to do and we keep, winning, then that's basically what the outcome could be.
For better or worse, what's been the most surprising thing for you over the last couple of years? Somebody that you thought would absolutely get venture backed in a heartbeat and they didn't, or somebody that you said, I'm not really sure you're going to, and then they completely surprised you and surpassed your expectations? Any stories come to mind?
I need to probably reflect on that more and look at, who have I been in touch with that kind of went on and either prove me wrong or prove me right. I would say that's a flaw of mine. I'm not too retrospective, like in terms of like looking back at, especially like one-off conversations. Clients obviously is one thing. Like I don't think I've had an issue. Well, I guess there was, and this is why, like with our new, like in the last like 3 months, we've completely changed our model. We go deep into companies. Whereas like when we were just getting started, we're like, all right, like it was a hot market, like it was at the end of the hot market. So I was, kind of, didn't have the right model at the time, but we were taking companies to market when there was no one listening, which was pretty frustrating. And I watched, two companies go down, but that at first was surprising. But then when I kind of look back, I'm like, wait, they were very resistant to giving data. They were very resistant to giving like access to the data room. They were very resistant to like reviewing the model with me. Like those are all red flags. And that's like a key issue. Like if a founder is like very hesitant to sharing data with me, like I'm only in it to help them win. Like that's like, because I get nothing if they don't win. And, so I try to really be a true partner, but, if I see hesitancy in sharing information, data, or hesitancy in taking the advice that I give, like I usually see those as red flags for me to take them as a client, but also like that's going to hinder their ability to raise capital in a lot of ways. If that's how they act with other investors, then I would be shooting myself in the foot to take them on. Maybe the business is great, but most VCs are going to be building a 10-year relationship with this founder. They want to build trust. They want to build transparency. They want to, build a rapport. And if I can't do it with the client, then I'm not going to be able to sell that to, the buy side, the investors. So I think that was, again, looking back at some of the clients that we had kind of taken on without the diligence that we do now, I'm not surprised that they were the ones that didn't make it. And the ones that continue to make it were the best, like just good people. Like we're in it for the right reasons. We're smart about running a real business, not, cash grab, raise as much money, do secondary kind of people. They really want to build like a long, sustainable, profitable business. I tend to gravitate more towards those types of founders. And those are the ones that suffered through the dry spell, of a year or so. And albeit we didn't get to help all of them, when they were hoping to have our help, just, market climate and also being a broker dealer, there's a lot of restrictions I have in terms of what I can and cannot do. But just seeing some of those companies come out on the other side and, get to live another day, get to profitability, and kind of take that other advice I gave of like, don't raise venture, be a self-sustaining business. And seeing that was kind of positive to see.
Money aside, is always hard. When we're talking about a deal, how would you define success?
Before success, like leading to success, or after success?
So, you start working with somebody and you have a deal that's out there and maybe it gets funded or doesn't get funded sometimes. Like, how would you define the success around that? Maybe the lessons learned, the things that you've taken in internally, the type of maybe relationship or partnership or open discussion that you've had as a result of that with these founders?
Well, ultimate success would be, the outcome for the founder has been clarified as to what's best for them and their business. And they're at least marching towards it, whether that was getting the capital they needed. Maybe it was, strategically changing how they position their brand to investors or customers. Like obviously the outcome of raising capital is my preferred choice, because I don't get paid otherwise. But I do find myself spending a lot of time helping founders that literally will do absolutely nothing for me on any kind of financial outcome, just because I feel it's the right thing to do. And also it's fun to kind of see if they take my advice, because I give a lot of advice and, not everyone takes it. So when I see someone actually act on it and they feel like it was helpful, I would say that's success. Like a founder basically hearing something that I shared with them after I heard them out, listen to their story, their background. So I have contextual positioning to give them advice, and they go, wow, I never thought about it that way. And then you see them immediately change whatever they were doing, fix that thing, whether they're small or big. And then seeing any kind of momentum from that is, I would say, success, whether that they're a client, not a client, someone I meet at an event, just fly by, not going to see them ever again, probably, but, being able to kind of see them recognize that there was an idea there and that they get to take it and run with it. It definitely feeds my ego for sure.
Yeah, no question. That's one of two questions I ask on all of these. That's intentionally nebulous and meant for you to squirm just a little bit, but in a good way, because I always get good answers. Or at least like the most honest answer. The other one I'll end with, and we'll have just a couple more questions if that's cool with you. I think more on like a personal basis, like how do you hope that your work will positively impact the industry or society as a whole?
Really what I set out to do is help founders stay focused on their business and leave the capital strategy to us. The narrative has been over the last couple of years in venture capital that, VCs hate bankers. They don't want bankers involved. And it's, rightfully so, given the rap sheet that most have. They're usually babysitters in the room. They're usually trying to always force themselves in every conversation. They're adding a lot of extra friction and steps. But because none of them have ever ran a business and have ever raised venture capital for themselves and built a company, they just don't get it. They don't get why they're not liked. But they have a ton of value. Like, a lot of founders are building great stuff. They just weren't born into a network, or they didn't have access to that before starting their idea. And usually the founders that get funded the easiest are the ones that already had the network to start with. And that's a huge disadvantage for so many, kind of either disadvantaged or diverse founders that, just don't get that opportunity. International founders, immigrants, things of that sort. And, what we're doing is, being able to kind of fill that gap. And I think that would be a huge value add, to bring deals to the table that would just have been neglected or never have been able to get off the ground, despite the merit that they have, just because the network, or like the cultural, and I say cultural in the sense of venture capital culture, not, US culture or anything else. Like, venture capital culture is very specific. There's a certain way and expectation to communicate, and expect back and forth communication to kind of be cordial. Because again, you have to keep in mind, like, every VC is usually making a 10-year investment, and that means they're going to be in bed with you for 10 years. There's a certain relationship and expectation and communication and transparency. So I see a lot of value of being able to help navigate founders through that journey, prepare themselves mentally for it, manage their expectations, and then ultimately being able to close around. And on the VC side, who may have been skeptical via the introduction or the pathway to how they got there, could still recognize a good deal when they see a good deal. And it's basically our job to kind of navigate that connection. And I hope to hit a level of scale where we get better and more refined results on the free tools to VCs and founders on, recommending deals, but more specifically on the ones that we manage, personally and take on as clients, being able to facilitate opportunities that just couldn't have happened, otherwise.
Having been in their seat before, I'm just thinking about this one on the fly, having been in their seat before, how hard is it to distance yourself from their seat versus your seat right now?
It's actually not that hard, because I'm not an employee of the business, and I have multiple clients. So that's probably the thing that keeps me honest and keeps me in my seat. And I do find myself sometimes creeping more and more into like getting more and more active in their business. And I'm like, oh man, no, like, it's their business. Let me, but I like to give as much value as I can. But sometimes I gotta watch my limits. But I feel like I pretty much stay the course of, like, I'm the advisor, the banker, there's, the consultant, the coach, whatever you want to call me. And it's ultimately their business. And I try to always set that. They're like, I am sharing what I think the market is dictating that you might, do to be the best interest of your business based on what you share with me. You haven't given me all the information. You haven't shared everything with me. Take this information with a grain of salt. So I always just try to make sure I frame that, just because I do talk in an assertive, definitive tone. And a lot of founders feel like, well, that must be what I have to do, or they find it as combative and they, disagree with it. And really, it's just like, here, I'm trying to expose you to opportunities that only you can decide on what's best. And so I don't know, I think I do a good job of separating myself in that role, but I also have a lot of relatability. So I think that's also how I'm able to build trust with founders, just because I can tell them how they're feeling before they feel it.
That's a superpower for your position. Last question. This is the one that gets a lot of people, but it's a fun one. Would you attribute your success more to skill or luck?
It's kind of like my answer to me. It's both. You can't have one without the other, in my opinion. I feel, skills, practicing and working on and honing a skill sets you up for luck. And you can't really expect amazing opportunities to fall in your lap via luck if you haven't developed the skill or knowledge to know when luck punches you in the face, or to put yourself in the right room with the right people, or kind of stumble across an interesting idea and be able to recognize it. And so I feel they have to kind of have both. I see a lot of people work very, very hard and have no luck because they focus on the wrong things or get distracted or don't accept help. I would say the more you accept help, the more you and welcome your network in, the more luck happens, I would say. But yeah, my answer is it's a blend of both. You kind of have to work the skill to get the luck, and the luck helps you up your skill and so on.
Good answer. I like it. It's my last question. Jason, this was awesome. Thank you so much for your time, for your insights, for your candor. I get really excited about people, paying attention to these sound bites because they really are going to be inspirational and educational. And in particular, I love that you're so hands-on with that too. You do practice what you preach. So any parting thoughts?
Outside of, if you're founder and want to have a chat, you can always reach out to me. LinkedIn is probably best, or an email, jason@thunder.vc. But always happy to just at least hear people out, especially if you take the initiative to reach out as a founder. I'm always pretty open to that. If you reference a podcast I'm on or something, I was like, okay, you spent 40 minutes listening to me. It's like, all right, then I'll give you a few minutes to listen to you. So that's something I always like to put out there.
Awesome. Well, thanks again. I appreciate it.
No, thanks for having me, Seth.
Thanks.